So I'm coming to you today to talk a little bit about risk management in futures trading. This is going to be a fairly holistic intro course with this. So I'm going to start off by talking a little bit about futures, because I know many people here are new to them. So I'm going to go ahead and talk a little bit about some of them. And then we're going to go on and probably go through the basics of them, how to do the risk management. I want to explain to you kind of how the account structure works and like how much money you need to have to be able to trade them, right? And then what I figured we would do is I have my paper account open on my trading view. So after that, I'm gonna pull the paper account over. We're gonna load some futures on, and I'm just gonna show you how to calculate risk. And I'll probably do it on ES, NQ, RTY, and YTM. So welcome to this course on trading futures. In this exciting and dynamic field, we explore the intricacies of futures contracts, their role in the market, and how to navigate the world of trading them. We're going to learn a little bit about position management, account size, having the basic information that you really need to get started and get into the fast-paced world of stock or equities index futures. Whether you're a beginner or an experienced trader, this course will provide you with valuable insights and tools to enhance these trading skills. So buckle up and get ready. Hey, Rebecca, for what I think is going to be a really fun journey. So one of the reasons why I think futures are really the future is because of an announcement that CME has also made recently about single stock equity futures are now going to be coming. So we're looking at the end of May. Is their tentative release. You should be able to see like your Mag 7, for instance, will be coming in as single stock futures. So when I explain to you kind of how we find value in these particular futures, it'll be good to know because when the equity ones become available, I mean, we will be ready to rock and roll on those. Now, this is kind of the material I plan to go through. I don't have a ton of slides because my idea is to get through the generic information, and then I want to spend time on charts, actually going through MES, going through MNQ, and actually showing you all, how to manage risk, how to get in and get out of positions, and I'm going to do that with TradingView. So first, I want to talk a little bit about futures. So futures are a really interesting instrument because they are a contract. Futures have been traded for a very long time. The first use of futures was, not recorded, but one of the first uses of futures was actually the Dojima Rice Exchange. You're talking like back in the era of the shoguns. They were actually using contracts to procure rice right off of an exchange that they had there. So that was really one of the first times. The futures ended up coming into the U.S. more under agriculture and textiles, but they became very popular through the Chicago Board of Exchange, or CBOE. They became really popular, started moving, and now we've got futures thanks to institutions like CME Group. We now have futures being offered on metals, commodities, equities, indices, Bitcoin, you name it. I mean, and I'll talk a little bit more about the asset classes.
Hello, Market Alchemists, and thank you for watching this video. We hope you enjoyed it. Please make sure to watch the next episode, and before doing so, like and subscribe.